Now on bank mergers and loans, KCB recently acquired National Bank of Kenya via the approval of CBK. And Joshua Igara, who's the group CEO of KCB, was here earlier on, and this is what he had to say.
So there's a bigger picture. How do you strengthen the financial sector? And KCB and NBK is not just the first consolidation of financial institution in our market. This is like the 10th. If you look at the last few years, it's the largest which has taken place. But I believe that for us, we've got deposits, we've got customers, but also from a point of view, we have common shareholders. Ultimately, when you think about who owns the enterprise, if they are looking at putting together their own shareholding, usually they should be allowed legally through that process. That's what we have done. There have been loans which have been a bigger challenge, and that is an issue that few people derive on. And there's been an issue of having not enough capital to be able to grow. So if you expand capital today, so NBK's capital today is 2 billion. If you increase it to 10, you start doing your business. They haven't increased their loans for the last 5-6 years. So this is where we want to challenge. With more capital coming in, how do you grow? So the agenda for NBK is a growth agenda. It's not a diminishing agenda. It's not to take out.
And Jared, you did an entire research on this as Kenya Bankers Association, and your conclusion, what I was seeing, is that it actually affects loans in the positive way. Is that true? Just expand on that for us.
Okay, I think this is a very topical thing, let me say, because people approach that topic from various angles. You had alluded to the fact that, look at this economy, look at its size, and look at the number of banks they have. That's a very interesting way of looking at it, but not necessarily one that adds a lot of value to the debate. I think, to me, and I'm the author of that piece of work, what we are looking at is, does the structure of the financial system support the efficiency of the system as a whole? Because mergers, acquisitions are not an end in itself unless they result in something that works for the economy. So what our study does is that we look at the structure of the Kenyan banking system, where we have top 10% of the banks accounting for slightly more than 60% of the market, and the lower 10 segment of the market accounting for slightly below 4% of the market, and the remaining, like 20 or so banks, being somewhere in the middle. So if you have mergers or acquisition where the big bank is acquiring a small bank, you're essentially not changing the structure of the system, because it will mean that the top end will move from 61 to 63, and the rest remains. Now, you can have a consolidated financial system if you start seeing movement between the middle and the top. We're starting to see that happening now, but albeit slowly.
But what are the dangers? Paint for me the dangers of having the banks merging, but not dangers for the banks, for the users. Okay,
what it simply means is, therefore, that we have a system. There are two extremes here. One extreme is what you can call a monopoly, where there's one bank, and the other extreme is a perfectly competitive system where there's as many banks as you can have, and the prices are uniform, everything is uniform. Now, what is realistic across the world is somewhere in between, and in between simply means you're either oligopoly, where you have a few banks, or a perfect monopolistic competition where you have a number of banks in the market, but they are competing on price differentiation, they are competing on service differentiation. That is the place where you want to be. So if you have mergers and acquisitions and you're closer to monopolistic competition, which is the nearest to perfect competition, there you mean, therefore, that any mergers or acquisitions that are happening, they're happening to the advantage of the customer, because now people are willing to meaningfully compete in service provision and in differentiating the services they offer, as opposed to where the service is homogeneous, and the other extreme where there can actually be a restriction of services they offer because they know they are few, and after all they can be able to make a profit. But I think there's one thing that I probably need to add,
very briefly.
And this is what's coming out of our study. The focus should be on efficiency of the system, not necessarily that one bank has acquired the other, because banks, they operate as a system. And if you have a system that is moving towards a concentrated market power, then there's a challenge there insofar as the ability of them to serve the economy is concerned. And I think that's what the study indicates for us.
Honorable Jakoyo, has it impacted loans in any way? Because we've seen that 20 small banks that control 8.7% of the banking business, 8 big banks take 65%. But from a business angle, does it affect you much?
Well, it doesn't, it will not help the borrowers because the lenders are doing it to make money. And in a system where banks trade with the government as opposed to creating products for the borrowers, they don't care. Really, as you know, all these banks, the big banks, you can put names to the owners who actually sleep with the states. So they don't care. You know, you cannot do mergers just by engaging CBK without engaging the political government. Because CBK really works through the political government. The political government is supposed to care for the consumer. So when the political government is captured by the moneyed banks, anything is happening. In fact, even what I've seen my friend Oigara say there, most of those banks they have acquired are failed banks. The reason why NBK is being acquired is because it is failing. The reason why the other one called Chase was being acquired, but interestingly, by CBK. I mean by KCB.
By KCB, yeah.
So it's actually the big boys sitting somewhere and making a decision which should be politicized and should be looked into, the merits and its demerits. Now let me tell you this. Because of that nexus between the bank owners or the bank managers with the political heads of political government, there is a lacuna created which the banks cannot complain about. The mobile companies doing banking. Mobile companies doing banking. And the late John Njoroge Michuki, when he was acting Minister of Finance, he tried to stop the telephony companies from doing banking so that the banks, which is his domain, can create products for people. You should be able to walk into a bank. Like now, think about it. And I keep sticking to the demolitions in Kisumu. Yeah. Think about those people who owed money on that M-Pesa borrowing platform. Where are they going now? If they had walked into KCB, they would just go, they can even go and renegotiate their loan.
Yeah.
Because even that loan is regulated. The interest, how much you can be charged is regulated. So I would like to see a scenario where we do banking sector reforms. And let us engage Parliament, because those are our representatives, and engage experts like Jared. Let people sit on a table like this and say, if we did this, everybody would be laughing. Not a scenario where banks report billions in profit and so many people, like if you look at the paper even today, look at the number of people, the number of homes being auctioned.
Exactly.
It means something is amiss. It means something is amiss.
Okay.
And that, I know we're going to come to you somewhere and one way just a little bit, but that's, you have mentioned a question that I had for Jared specifically. The fact that we're seeing banks being closed and others being acquired. What is happening in the industry? What is truly happening? Is it raising eyebrows for you bankers when you see this happening? Do we need to worry about it?
That's very general. You know, the way you put it is like there is a bank down the road being closed every day and another one being bought on the other day. I think, you know, the reality is that, you know, we had a bit of volatility in 2005, 2006 with the 3 banks being put under receivership. That, of course, reverberated itself through the system. And now, over the last 2 years, we've seen a sense of calmness in the market. Normality has more or less returned into the market because now you can see banks.
So it's not a concern.
It's not a concern.
All right.
But I need to add one thing though. You know, when you talk about the mergers and acquisitions, of course, you know, there's what you can call the need for market to remain dynamic and adjust. And one thing that Joshua said there that probably I need to emphasize is that, you know, at every one point in time, you probably see those dynamic adjustments happening without necessarily being prompted, because, I mean, banks, just like other businesses, are businesses and they need to position themselves in the market. Right. But another thing that I need to add, and this is probably on the final one on this, and this is really based on analytical work. If you look at, and this is a very popular phrase that you hear, that banks are making billions. banks are required to have billions in terms of capital. And because of the billions that they require to have as minimum capital, obviously the profitability will obviously be in billions. No. So it's not a case of looking at the nominal numbers, but a case of looking at what's the return on the capital that has been invested. Because if a bank gives you a return of 17 billion and it has assets that are of $1 trillion, then you have to start looking at what's the return on the asset as opposed to looking at the 17 billion at any given point in time.
Mheshimiwa, let's quickly get their thoughts before I come to you.
One point on the billions. I once had a conversation with somebody who told me they looked at a foreign bank in Kenya and what they were declaring. That bank does not make the kind of profits they make here in their own country. The profits made here are special, it is said. Yeah. I want to pick on the point in regard to the mergers, on his point on efficiencies. If that is what is going to be the net effect, it will be an excellent move. If we can move towards, one of the challenges retail in Kenya has, for example, is that retail does not have, and I was telling Trevor this, does not have assets with which to take to the bank to give me a loan. If we can start creating systems where my credit rating is actually the asset that I bring to you, if we can get those efficiencies in place, then the mergers will be an excellent option. If the small trader who has a challenge dealing with a big bank will now be accommodated in what will technically be an even bigger bank, then we are okay with the mergers. But if I have a challenge getting my loan from NBK, for example, when it becomes bigger under KCB, if it's just simply going to make it that much more difficult for me to get a loan, then it's not working for the masses.
And I think, let me take it from where Amboi has stopped. Ideally, when the banks merge, we expect as traders the interest rates to go down because of the distribution of risks and everything else. And Gerard can tell us this, because when it comes to capping, I don't see any difference when banks merge. I think I'll support Mheshimiwa Jakoyo when he says it's their own personal business, but not the business of its customers, because we don't see any change in terms of interest rate. When it talks about efficiency, I'm looking at maybe the broader geographical reach of the banking operations. For example, if NBK merged with KCB, then KCB now everywhere you can be able to access to their to their banks. But having said that, I think we should revolutionize the banking sector in Kenya, because one of the problems that we are having is that they have shut out the small medium entrepreneurs. When Equity came on board, they came on board with very good incentives, and every person could open an account with 0 shillings. And Mama Bonga, you could find them lining up to deposit 50 shillings, to deposit 100 shillings, to deposit 2,000 shillings, because there was an incentive and everybody was included into the system. Yeah. Before then, going to open bank accounts, you are told you have to have a minimum of 50,000 shillings, a minimum of 20,000 shillings, which a lot of small medium entrepreneurs, because we deal on a daily, we live hand to mouth. So whatever the profits that we make is what we spend for our lives, is what we pay rent, is what we make the shelves empty, because we buy milk every day, we buy bread every day. So we revolve the economy. But now, with the capping and many policies which have been brought on board, they have shut out the small medium entrepreneurs, and that's why now the SMEs, they have opted out to go to mobile banking, because from where I am I can Fuliza. From where I am there is Okash. From where there are other mobile banking platforms where I can get money. Now they have even gone further by the mobile banking in terms of mobile money. They even don't look at your CRB rating. They just give you money. So the bank is losing a lot because it has refused to move with time. And let me tell you, it's going to be archaic. Just like the pager, the banking sector is going to be archaic. It's going to just to be left to the corporates. But the SMEs, they are going to form their own economic ecosystem whereby they can be able to sustain their businesses through that economic ecosystem.
I wonder how many people remember the pager.
I had to think.
Anyway, we have to leave it there, guys. Thank you so much.
I wanted to say something.
Yes.
Because this cannot go without challenge.
Yes.
He's saying the banks are businesses. banks are supposed to facilitate businesses. I was in Parliament. I came to Parliament 2002. We dealt with this issue of minimum capital.
Yeah.
I know the story of how Family Bank was started. I know the story of how Equity Bank was started. There wasn't much capital involved.
Yeah.
It was just an idea. The banks don't have money. Banks hold our money. So you must come out with products. For example, a bank today, if you go to take a loan, they will charge you interest 13-14%.
Yeah.
But if you go to save, they tell you, I'll give you 5%. It shows that the system is not working.
Yeah.
It is the opposite everywhere else. And what Wamboy has said, the banks, foreign banks, headquartered in London, report losses in London, but report billions. So if they are business, are we the business of the West? Really, you must work with us. In fact, I think the banks using this bankers association need to put a lot of pressure on the splitting. If telephone companies want to do banking, they must be split by law. You must split them. There is no way you can say Safaricom is making hundreds of billions, but it is just M-Pesa proceeds. How much do they make from phone? If I call you, their market has been eaten by an intruder, and you can't hear it from them. And the last time I was here with Habil, who is their CEO, I said it here. Why are they not complaining about an intruder? Why are they milking us where they should not even be touching us?
Now you know I have to give him a right of response, and we really have to close.
Okay, I think,
very briefly.
I think you can see that we're having a very interesting conversation, and we can't have conclusions on this conversation here. But I'll just say two quick things. If what Honorable Jakar is calling an intruder is what he's celebrating as a revolution, then I think then we have a different, we need to have a deeper conversation on that. Regarding the foreign banks and local banks, and I think it's easier for us to make very easy conclusions. If you look at this market and take an historical perspective, there's a time when the foreign banks, and I won't go into names, were the top banks in this market. They were really top banks in this market. Right now, the local banks are really at the top. If you look at the banking industry globally, you're seeing a number of realignments where a number of banks have Barclays divested from Africa recently. If they were making a kill out of Africa because there's an opportunity here to exploit, then they will have continued even putting more resources here. So I think you have to look at the banking industry in a manner that is a bit more dynamic, because as you said, banks are there to intermediate. They have their capital upon which they mobilize savings, which savings they use for lending. So that has to be seen as a unique business. It's not basically a case of looking at, how can I put it without appearing to be kisungu mingi. It's not a case of saying that, no, they are taking my money and then they're exploiting me on that. It has to be looked at. And in that intermediation process of mobilizing savings and using them for lending, there are guidelines that are provided by regulators in terms of how much capital do you need to have for you to mobilize this amount of savings.
Okay.
So I think it's a healthy conversation that we can have. Okay. But I think it looks like we need a whole
session.
Yes.
Yeah. Thank you so much for making time. Jared Osoro, Director, Research and Policy, Kenya Bankers Association. Honorable Jakoyo Midio, former Game MP. Samuel Karanja, CEO, Importers and Small Traders Association. Wamboe Mbarire, CEO, Retail Trade Association of Kenya. Thank you so much for making time for us this morning. We have some feedback. Should we read them now or come after the break?
Let's do that. Let's take a look at the tweets and SMSs.
Yes, let's bring them up on SMS 22422. Kindly tell us your name and where you're texting from. Also on Twitter at Zinzi_K, at Trevor Mbija, at Citizen TV Kenya. Engineer Lazaro, you say the SGR directive is illegal and can be challenged in court of law. Personally, I don't support monopoly. If SGR is convenient, why enforce monopoly? Give competition a chance.
Okay. Still on Twitter, hashtag is Daybreak. Joy, you say on SGR, all cargo destined to Nairobi has to be railed and cleared at ICD. The protesters in Mombasa are right. It's more expensive to use SGR than trucks. Importers should be allowed to choose their preferred clearance point.
All right, let's see what else you're saying here on social media before we get into your SMSs. That's Bet Joel says, same question. How many Kenyans are ready for Kenyan-made products? Almost zero. We always embrace foreign technology, education, healthcare, governance, and everything in between. The only thing we are proud to have invented and will always defend it to the core is corruption.
I would have said it.
Wow. Okay. Interesting comment.
Very serious views there.
Okay. Papomat is what you call yourself. You say, we need to wake up to the sad reality on the ground. If the ease of doing business has been improved as you claim, why do we have so many businesses closing down?
Good question there. Let's see what else you're saying on 22422. I believe now. Just text us your name and where you're texting from, and we'll sample some of them. Kipiegon Langat from Mombasa says passenger SGR should be a service to citizens and not a commercial venture. All right.
Kilimo from Eldoret, SGR is good and safe and does not cause accidents, though these lorries have cost lives of people all the time, trailers colliding with buses and cars.
Right.
So issue of transport there, safety.
Steve in Mombasa, you say one reason ordinary Kenyans shun banks among many is that people don't have surplus cash. Supposing one earns roughly 20,000, why should I bank this money and be charged for whatever small withdrawals I do to meet my own bills?
Okay. Otieno, you say those who run the ease of doing business index must revise their input to the index. In Kisumu, our businesses were destroyed ruthlessly and they are continuing. Just stop threatening business owners as criminals.
Okay. You don't leave us your name or where you're texting from, but you say nothing to celebrate. Businesses are closing, the economy isn't growing, worst times are ahead of us. Sahi, it's kila mtu na Mungu wake. Government of Kenya has failed Kenya and Kenyans. Oh, wow. All right. Okay. Thank you for all your feedback. When we come back, it's our turn to eat.
We'll be cooking. Chef Ali and Chef Kennedy for breakfast tips. See you on the other side.